Okay, so let's go over the answer to the Power Strategy 1 question on the previous page. So in order to do that, let's look at the chart again. So this is the Strategy 1 trade. Now, first of all, the first step is obviously to identify the trade. So pause the video, identify the trade. Did you get it? Now what you want to do is you want to identify all AB equals CDs on the chart. The one that we're going to be discussing here is this one here. A, B, C, D. AB equals CD, meaning the move from A to B is exactly the same as the move from C to D. Now, where are we going to capitalize on this trade? Where is this trade actually occurring? It is occurring between point C and point D, meaning that's where we're going to be trading it. So the first question is, where are we going to be trading it? Where are we going to enter? So it's a Strategy 1 trade. We want to capitalize on the C to D move. We know the direction that we want to trade here is long. We're looking for the C to D to be upwards, because A to B is upwards. And therefore, for the whole pattern to complete, which is A, B, C, D, we know that we're anticipating price to go up. Now I'm talking about anticipation here because at this point here where you're waiting for point C to be created, you can't see, you don't know where the price is going to stop. And you can only just wait for it. Therefore, you can't see any of this price here. So what you're going to be doing is when this green bar forms there, you're going to think, okay, point C has probably been formed now, and we're looking for price to go up, and we can possibly get an A, B, C, D move here. So you're already going to anticipate that if this is point C here, you're going to work out the move from A to B. You're going to take that move from point C up to this point here, and that's going to be your D point. And that's where you're going to anticipate price to go through. So where are you going to be entering? If you identify this first green bar here, and you're like, okay, an A, B, C has formed here, where are you anticipating to enter the market? Pause the video to work it out. So where we want to be entering is the 25% move from point C. 25% of the move from A to B. So whatever A to B is in pips, you take 25% of it, and that many pips from point C upwards is where you're going to be entering. What about our stop? As with all of the other Strategy 1 trades, we want to be placing our stop below point C. So what price would you wait for to move your stop to break even? Pause the video to work it out. So the price we want to wait to move our stop to break even is the 50% mark. 50% of the move of A to B from point C. So 25% is the entry, and another 25%, which equals a 50%, is where we will be moving our stop to break even. So at the price identified, that's a price. Once hit, we're going to take our stop from here and move it up to the entry price. Now our stop is where the entry price is. That means if price happened to come down below the entry price, we would exit the market at the exact same price that we entered, meaning we won't lose anything. It's our contingency, it's the way we preserve our capital, and it's the way that regardless of whatever the trade does, we're going to be there to fight for another day. We're not going to be losing any money, and we're going to be entering in another trade. So where would you exit? Now we're obviously exiting on point D. That's what we do with Strategy 1 trades. And as you can see, price just went up, 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 and it hit point D, and we exited. So what about our risk reward here? Well, we know that the entry to the stop is 25%, and we know that the entry to the exit is 75%. Why? Because from point C to point D, it's 100% of the move from A to B. And we know that the entry is at 25%, and we know that the exit is at 100%. So we've got 75% reward, we've got 25% risk. What is our risk reward then? Our risk reward is 3 to 1. The reward is 3 times greater than the risk. So I hope you got that right. Now obviously feel free to go back over the previous module and double check everything. Make sure you fully understand what we're covering here. These are the actual trades. This is how you're going to be making money with this strategy. So you need to make sure you understand it fully. Now, if you're up to speed with everything, then please continue over to the next page and we'll go through another example.